Welcome to the Nate Gratian Show, where we talk all things personal finance, investing, and entrepreneurship. I'm Nate Gratian, your host. Thank you for joining me here today. And today is the 15th of October 2022, and we have a weekly portfolio report and a look into the stock market on eToro, and where we do our investing and dig into what happened this week and share with you what's happening in our portfolio and what we're doing here on eToro, which is where we do our investing. And did you know you can invest with me on eToro as well? The link is in the description below. That's eToro. It's a great platform, great brokerage to invest with. I really enjoy it. But let's dig into today's discussion about the past week, which started on the 10th of October 2022, and what went on. There's a lot that took place. With all the events that took place out this week, our portfolio did close the week down 1.92%, which, with everything that happened this week, all things considered, fairly volatile week, and I'm okay with that. We are a long-term investor. We focus on the long term. This is a long game for us, a marathon. We're not in this for jumping in and out of things, but in for the long haul. So 1.92% down this week. And then we didn't make any deposits into our account. We didn't add any funds into our account. We kept things really stable, which is what we had planned for the week, understanding that this week was a hectic week and a busy week with everything that's going on, being the second week of October, the second week of Q4, and everything going on there. So understanding it was a busy week, we planned on keeping things pretty stable and pretty steady with everything that went on. The first thing that happened was on Wednesday, and these aren't every event, these are just some of the headline main events. The first thing that happened on Wednesday was the Producer Price Index, or the PPI. It came in hotter than expected, which obviously sent the market down. And so that came in hotter than expected on Wednesday. The next thing that happened was on Thursday. This was the Consumer Price Index. This is what people look at when it comes to inflation. This is how they look at inflation. The core producer came out as well. This takes energy and food out of the mix. These came in hotter. The consumer, the CPI, came out at 8.2%, 0.4% hotter than expected. This sent the market down, opening the day about 2% down, and then the core producer price, the core consumer price index, came out at 6.6%. This is when you take energy and food and a couple of these things out of the mix and you gauge the inflation number. That came out at 6.6%. And so these numbers were hotter, starting the day down. However, with the British pound gaining some strength and rising a little bit, and then on top of that also just the major sell-off during the day, we had an intraday rebound that took place within the one day, and the S&P actually, after starting 2% down, rebounded and came back to finish the day 2.6% up. A huge movement in one day, especially with a CPI number that's hotter. With this CPI number being as hot as it was, the stock market's now expecting the Fed to raise rates 75 basis points in November and then another 75 basis points in December, as they continue to battle against inflation. But it is possible that the stock market is looking through these rate raises and into 2023 now to see what that year may be holding. When we move on to Friday, the earnings really picked up. We're really entering into earnings season now for Q3. The banks gave their reports. We start off with the financials, and the banks started to give their reports. It came out mixed reports, and the day started off okay, but many of the banks' outlooks for the future was not great, as they talked about concerning the economy and GDP, gross domestic product, and recession and things like that. It was not great. And so we pretty much gave up what we gained on Thursday Friday. We gave it up with the S&P finishing just down just over 2% on Friday. And so you can see the volatile movement that happened this week, and the way I'm okay over the long term with the 1.92% on a week like this. This doesn't bring into consideration all the things that was happening outside the US. So you have the UK government talking about tax cuts and things like that. You have the Bank of England putting the pressure on pension funds and saying they're going to stop intervening. And all these things. You also had potential talks in Turkey taking place with Putin and what's happening in Ukraine and everything that's there. And so all this, the nuclear threats are still there. All this stuff is going on, and so that also all played a part into things. As we look into, I'm going to talk about next week and then the next 3 weeks, because the next 3 weeks there's going to be a lot happening that's going to be important. As we look into next week, we will be depositing funds into our account on Wednesday. On Wednesday, we'll be depositing right between 1.5% and 2% of our overall portfolio into our account. And these funds, at this stage, we have planned to invest those funds beginning on Friday it's the 21st, Friday, into the ETF by Vanguard VUG. That's a growth ETF that holds around 400 companies, growth companies. As I look into the future, I'm seeing these are starting to be good buying opportunities for long-term investing, and so that's why we'll start leaning towards growth a little bit. And as we go through November, even maybe add a small fraction. We'll keep within our strategy and our plans a small fraction to a little bit of crypto again as we go into November. And so that's next week. That's the plan for next week. And next week we'll continue on with earnings reports. There's some big companies giving some of their reports for Q3, and that will let us know again where things are sitting for these businesses. Over the next 3 weeks, 3 weeks from now takes us to November 4th. In the next 3 weeks, we'll have a lot more information. We'll be well into earnings season and what's happening and guidance and outlooks for what companies are thinking is going on. And 3 weeks from now, we'll have all that information. Plus, we have the Fed meeting on November 1st and 2nd where we're expecting the 75 basis point rate hike. And so we're expecting that. And then we also will have another jobs number for October on November 4th. And so we will see better where things are sitting as companies are announcing more layoffs and things like that. And so we'll have a lot more information. We'll know a lot more. Our next deposit date after next week is planned for November 2nd when we're going to be investing those funds on the 4th as well. And so it'll be a good time to really see where things are, and we can make our investment choices. And so that's the next 3 weeks. It's going to be a big 3 weeks. It's going to be an important 3 weeks, and we'll have a lot more information then. Did you know you can connect with me on YouTube and Instagram as well? YouTube, just search The Nate Gratian Show. You'll find the podcast on there, along with shorts that I do throughout the week, keeping you updated with what's happening in the stock market and what's going on in our portfolio. And then Instagram at Nate Gratian. If you have a question or a topic you'd like discussed on a podcast episode about personal finance or investing or entrepreneurship, you want to bounce your ideas off someone, or you just want to hear my thoughts on it, then send me a message across on Instagram at Nate Gratian, or leave a comment in YouTube or one of my posts there, and I'll let you know. I'll let you know when I do a podcast episode on it, so that you can hear my thoughts in regards to your question or topic that you'd like discussed. But thanks for joining me here today. I hope you have a great and a nice weekend planned. We will see you in the next episode.